Welcome to Getting Real with Real Estate with Danielle Kempf and Jim Kempf, St. Louis's favorite father-daughter real estate team. Your source of real estate information in the greater St. Louis area.
All right, we ready to go?
We're rolling.
All right, well, welcome to the show. We're back again.
Back
right.
again.
All right, it's actually a Friday today. I don't know if anybody,
What does that mean?
I don't know if anybody cares about that, but it is.
What do you mean? You guys work on weekends, though.
Yeah, exactly.
All right, well, hey, I guess first we got to get started with a joke again.
Start with the joke?
Go for it.
Okay.
You got one for us?
I do. Why was the mortgage so clingy?
I don't know.
It hated being alone.
It's funny.
Queen of the corny jokes over here.
Thank
That's
God
good.
for Google.
Right on. All right, well, that was a good one, Danielle. Thank you for that.
Thank you.
Get us started. All right, so we're lucky again today to have Brennan Anderson with Heartland Mortgage back with us today. Thanks for coming in again.
Thank you guys for having me. I'm always happy to be here.
We sure appreciate it, man. So, we get a lot of questions. Well, our first show, obviously, we were talking, about rental financing, things of those nature. So we're kind of continuing on where we left off there. But we do get a lot of our buyers, people that are looking for houses that maybe need some work, a little TLC, and they want to do like renovation financing too.
Mm-hmm.
So we kind of, if we can, we'll talk about a couple different options that might be available for folks that are looking to buy a house that needs some work. And I think one of them we talked about was an FHA 203K, right?
Yep.
You want to maybe tell us a little bit about how those work, Brennan? Or
Yeah, so, with those, there's actually the FHA 203K loan, and then there's also the home style from basically Fannie Mae. Okay. And really kind of the thing with that is that they would give you funds to do some of the renovation cost. However, there's going to be a limit on the amount of funds that they'll be able to give you for that. And also there's a lot of stipulations that a lot of buyers necessarily aren't aware of that they need to go through in order to have those funds and have that loan actually issued to them.
Yeah. Gotcha.
From some of the conversations that I've had about it, once I explain a little bit more about the requirements that they need to meet up front, more times than not, it kind of pushes them away from doing that type of financing because it's a lot of legwork up front before you even start any of the construction process of it.
It's just not as easy as closing on a house and getting a wad of cash to go, right?
Exactly.
Take your time and get your house fixed, right?
Because that investor, he's really going to want to make sure that money is going to be, doesn't carry as much risk per se.
Right.
And so if someone's just looking like, oh yeah, here's the money to purchase the property, and then here's also a lot of cash to go do the refinancing or the renovations.
Right.
But in a sense, it's like, they want to know what's going to go into it.
They're not just going to give you a lot of cash and be like,
yeah,
have
here you
fun
go,
with
have
it.
fun. Yeah, they want to make sure that they're protected and that they're going to get their investment back that they're putting into you. So, with that, the stipulations, with some of them is just being able to actually have everything lined up at the beginning, whether that's going to be inspection fees, your contractors, and most of the time that contractor is going to have to be approved through that lender or Fannie Mae. You'll also have, the permitting fees, the actual bids for each thing that you plan to have renovated, and basically getting all of that up front is a little bit tougher than most people would actually think, because I feel a lot of times people jump into it, they have some rough estimates, but it's not anything like solidified on some paperwork like this is going to be the cost of that.
So up front, if I was the buyer, I would have to go, let's say I want to do my bathroom and a kitchen, I would have to go find an approved contractor, right? Get a very detailed line item bid of everything they're going to do for me, right? Permits, all that stuff, what it's going to cost. Same thing for the kitchen.
Yep.
Whoever, you're right. I mean, how many people are involved in that? You got your granite guy, you got your cab, right? You got
plumbing,
maybe, you got
architecture,
all that stuff, architectural fees,
engineering. If there, you need to do anything along those lines.
Yeah.
So,
right. So that's a lot of work.
Just right up front, and that's the other thing with it too is just to get them out there to get the bids for that. I mean, they're not going to do it for free.
Exactly.
I mean, some may.
Yeah.
I mean, I think maybe some people do quote
some
for free.
Some of them will.
But,
I mean, we have some contractors that'll do that stuff for us. But you're right. I mean, they
And it's harder to get into the house if you don't own the house yet. You have to work with the
Well,
seller's timetable then
yeah.
too.
Mhm.
Yeah, exactly.
And with some of that as well, I mean, there's typically a time frame too that everything has to be completed by. So not only is that lender putting you under a time frame, but you're going to have to correlate that with all your contractors to make sure that they can abide by that time frame.
Right.
Now with the home style loan with Fannie Mae, there is a section of it to where you can do it yourself. Like if you're actually like a certified contractor and that's your job, then you can actually be able to do it yourself.
Okay.
And to get into the specifics of it it always comes down to the guidelines that lender has.
Right, okay.
And depending on the lender, there's going to be lender overlays too on what these specific requirements are going to be. So typically, like a time frame for FHA loans, it's going to be like 3 to 6 months.
Okay.
So you really kind of got to get moving on that once you
Right.
get going.
Right.
And then for that home style, it roughly can be about like 15 months.
Okay.
Now I'm sure if you have
That's a little better.
Yeah.
I guess, really, if you think about it. But not very many of our clients are contractors.
exactly
Right, and they all seem to want to do the work. That's what I think most people think is.
You can do the work
They wanna do
yourself
the work
with the 203K,
themselves.
but you
Yeah.
have to have a contractor do like everything, like even the
Right.
painting, which someone
Right.
could probably easily do. You have to have a painter, a professional painter, come in and do
Exactly.
that, right?
And for that part, with painting something that's not going to be as structural, that may be something that you would be able to take care
Okay.
of.
Okay.
But when it comes to the actual structure itself
Yeah.
and taking things out, anything that's really going to be regarding
Gotta have some-
permits.
Yeah.
I mean, that's a big thing too. Is
Gotcha.
when someone comes in there and they just do things not pulling any permits, well, then we're going to have some issues, on that sales side at the end of it if they
That's
plan
right.
just to flip it. So.
That's right.
Yeah, I mean, with those programs, if someone is willing to go through the upfront work, by all means, I'm happy to take that run with
Right.
you.
Yeah.
Right.
But I just for everyone to know, it is work up front.
Yeah.
And the other thing is it may be more beneficial to look into alternative solutions.
Okay.
Than being able to do that, for example, hard money or bring another investor into it with you.
Okay.
So that's kind
Mom
of
and Dad.
yeah.
Call mom and dad. Get
So-
that rehab money.
That's
Get that inheritance.
yeah. I mean, and it if anyone's really kind of interested into it, Google's a great place to just get started. Google,
Yeah.
YouTube, and you can find information on there that will be like, okay, this is what I need to kind of get my ducks in line for in order to
Yeah.
even try to seek this financing.
Right.
And for the lending side of it, I mean, I'm sure that most loan officers will be happy to provide you with any of the information that you would want on that property.
Yeah.
It's just a matter of making sure that all the ducks are in line
Yeah.
and you have that loan officer that's willing to go the distance with you on it,
Right,
because
Exactly.
it's going to take some time for that whole thing to close.
Yeah, that's a long process. So to our listeners out there, if you're considering an opportunity like this, give Brennan a call, and he'd love to chat with you, I'm sure.
Absolutely.
Kind of tell you what it takes to get it done. So
Then
okay,
you had
that's
already
awesome.
alluded to this next topic. You were going to dive in.
Yeah, well, I think the next, Brennan said it as well. Hard money is an option for a lot of especially for like folks who are out there flipping houses, right? Buying one to sell, to fix up and sell. I've done it myself actually years ago when a buddy of mine and I used to do houses. We have borrowed hard money, and it works very well. I mean, if you don't have the cash up front, but talk to us a little bit about what those are. I know those are that's an asset. Basically, it's based on the asset, not so much the borrower, right?
Yeah,
Is that kinda-
yeah, and that's the big difference between conventional qualified mortgage financing and hard money and even the non-QM products on that. Just because those non-QM products and hard money, they're going to want to make sure that the collateral is actually there.
Yeah.
They're not too much concerned on that buyer or the investor, but they want to make sure that the collateral is there. That way, worst case scenario, if something goes south with that investor, that hard money lender is still going to be able to recoup their investment into you.
Yeah.
Now, granted, they're not going to make their full bill on that, but at the same token, they're still covered enough to be able to take on that risk.
Yeah,
Exactly.
they know they're
Yeah.
protected. They're always going to have. So I guess maybe an example. I don't know. Let's say you have a house that would be with an after repair value. Let's keep it simple, $100,000, right?
Mhm.
So if someone were able to find a house like that they could buy at, let's make this number pretty small, say 40,000, 40% ARV, and put maybe 20 grand in it, so they need 60 to get their project done, right? That lender, he knows the house is going to be worth 100 when all that work's done, so he's okay loaning 60 grand on something that's going to be worth 100 grand. Worst case scenario, he forecloses and he sells the house or finishes the house, and he can make a deal still. So
and one of the more, I guess, and it really is going to come to that hard money lender, because where it's different is that there's really no set guidelines that any specific hard money lender has to follow. So it's going to be kind of up to their discretion. And with that, a lot of times from some of the hard money lenders that I've spoken with, they actually want to see that you have the funds to be able to do the repairs, and they'll give you the money to borrow for the purchase of the property itself. And with at least with some of our hard money lenders here, they'll actually want to see those funds that you have for the repairs held in escrow. So whenever it comes to a point that you're actually like, okay, I'm ready to start, doing the floors here, this is what the cost is going to be for the floors, they'll then want to see kind of that bill and then allow you to draw that from that escrow account to complete that stage. And as you move into each different stage of that, that's when you can draw more and more from that escrow, making sure that lender that's holding everything, they approve of that. So that's kind of the big I guess differences there, is that from my experience with some of the hard money lenders, they would rather have you have the funds to do the repairs than the actual purchase of the property.
Less risk for them.
Exactly.
Essentially, that's what it boils down to.
Yeah, exactly. So
and a lot of times these folks are just private individuals. In some cases, right?
Or, I mean
there's organizations, I guess, but then it can be just as easy as Danielle loaning you money on a house, right?
Exactly. And you just going through the proper paperwork through title, to make sure that everything is solidified, on the records when it comes to the liens against the property and whatnot. But I mean, even with Mark Hoffman, he even will do the same type of lending for hard money if the scenario makes sense to him and his niche that he's looking for.
Gotcha.
Okay.
So that's a big part. And then the other thing that would play into effect is going to be that investor's experience. So if it's your first time doing it, then it's it's that hard money lender. One is either if you have a solid plan to give to them and it's your first one doing it, they'll probably end up doing it. But you're going to pay for that.
Or kind of like what we talked about in the last episode, start with like the beginning, like that duplex type thing, build that experience, try and get up to 10 mortgages with conventional loans, and after that, then you might have an option to go hard money or something.
Or I mean, another way to even get into it too is like, there's always different groups that meet up that everyone is like-minded. And, if you go into like a real estate investing group and you meet, people there and you try to tell them what you're trying to do, a lot of times the people there will be like, hey, we want to pay it forward and send the ladder back down to help new investors get started. So we'll help you get your footing. We'll front the bill for it, and we'll also show you kind of the ropes on what you need to do. And then in the same token, with the hopes of them passing the ladder back down whenever they're at that stage.
There's several organizations that do that.
That's
right.
cool.
100%. That's kind of how I got my first start, to be honest. A buddy of mine and I, we found a house thanks to another investor. He kind of turned us onto it. Helped us with the offer and the whole deal. We got that deal, and he gave us a lot of pointers along the way, and it worked out fantastic. We kind of tried to learn as we go, and like you said. But when the very first time we did a hard money deal, we had to kind of show the lender, hey, we've rehabbed this house, we rehabbed that house. This is how it worked out for us. We were able to do it in such a time frame, and then he's like got a little more comfort level with it.
Just verifying your experience there. That it's not your first time doing it, and because I feel like if someone goes into it for their first time and they don't have the experience to where it can get overwhelming at points when you walk into a situation and you thought it was going to be this, and it's a whole different mess that you weren't prepared for at all, and that can be overwhelming, and definitely throw in a lot of stress to that investor himself. So that's kind of one of the things where if you're starting out, it's definitely a good idea to have a mentor to kind of back you with
Yeah.
that.
For sure.
Um,
For sure. What about rates and terms and stuff on hard money? I know back, and again, when I did it, it was years and years ago, but there was always like an upfront charge.
Mhm.
Is that still pretty typical?
Yeah, that's pretty
A couple
typical.
points,
Yeah,
right?
probably
Two,
be about
three,
2 to 3 points.
Okay.
Kind of, I mean, and really it's going to be on that hard money's discretion, and they're going to base
Right.
that off of kind of your experience and what
Right.
you're asking for. If there's going to be more risk to them, then they'll probably charge you 4 points up front or something
Right.
along those lines.
Right.
However, if you're a pretty savvy investor that's done this over and over, and you got a solid plan,
Yeah.
they may not charge you as much up front because it's not as much risk.
Right.
You know, you kind of have to always kind of weigh the balance of, okay, if there's more risk to this investor,
Yeah.
then it's going to cost more.
Yeah,
However, if
exactly.
there's less risk, then they're willing to give you a little bit more because at the end of the day, the whole goal of investing is to have money make money for you.
Right, that's 100%.
And
Yeah.
so with that, you know, being kind of the attitude towards it, it would make sense for that kind of the risk versus reward scenario on if it's more risk, then they're going to charge more on that.
Yeah.
So that's kind of the big thing that I think, you know, people going into real estate investing kind of need to be aware of, and also just, you know, just be conscious of that whole risk and reward whenever you're going to actually try to borrow money.
You got to do a lot of homework just in thinking about, like, again, a lot of people want to buy that house to fix up and flip now, right?
Mhm.
Everybody saw HGTV a million times. That's what they want to do. And you really do have to really do your homework, especially on trying to control your costs and know what your costs are going to be up front on that rehab.
Hmm.
Because like you said, that's where you can get into a whole world of hurt.
Yeah.
You think it's going to be,
Just a simple redoing the
Simple,
bathroom and then
yeah.
everything's rotted out. And
yeah,
gotta
you tear
replace
down
it.
one wall, you tear the old tub out, and you find termite damage, and there's $2,000 extra that you didn't plan on spending, whatever it
Mhm.
might be. So, and then what kind of rates now are you seeing on hard money? I guess, yeah. Any
So,
thoughts on that right now, or
it's-
where they're at?
It's really going to come down to the full
Same.
scenario,
Okay.
but I mean, just a general sense, you know, you can get something. I mean, the prime rate's around 8.5 right now.
Yeah.
Typically, they're not going to want to go lower than prime. They're still going to want to be able to make some. So, you know, with that, I mean, if you find a hard money lender that's really got, and you have a really good plan, I mean, they may charge you 9.5 for that rate.
Okay.
However, it can go all the way up to 14.
Yep.
You know, in some cases there. So it's really kind of gonna depend. But the thing with it too is that I think some people aren't aware of is that majority of the time hard money is just going to be interest only and have a
Yeah.
balloon payment
Right.
at the end of that.
Right.
And that payment is going to be amortized, you know, over 25 or 30 years, but it's still going to be, you know, a term for about 3 months. So they're still
Right.
making the monthly interest payment on that
Yeah.
over that longer amortized schedule. But then they're still also going to recoup that balloon at the end of it whenever you do fix and flip it or refinance.
Right. So having an exit strategy is important if you are doing hard money, to know if you're going to sell that house, right, or if
Mhm.
you're going to get a mortgage
Yep.
and pay off that hard money guy, and then get a conventional mortgage to maybe keep it as a rental,
Yep.
or keep it for yourself, or whatever you're going to do. If it's an investor, it's probably a rental. But so you really got to know what you're going to do.
Yeah.
Right. You got to have that exit strategy up front and know, because I think when I did them, we had like a 6 or 9 months
Mhm.
was the term on ours, and it was interest only. But man, you had to have that thing done and sold.
Yeah.
Right. So there's no messing around. You got to get in and get it done and get it on the market.
Mm-hmm.
And
Yeah, and you know the terms really. I mean, the terms can vary too, depending on who that hard money lender is. I mean, 3 is probably the shortest,
Yeah,
and
that's correct.
then you know you'll have 6, 9, 12.
Okay.
I don't think most people will go past 12 months,
Right.
That makes sense.
just because if you're going past 12 months on your plans there, then there's usually some reasoning
So,
behind
yeah,
that.
you're probably not the best rehabber.
Yeah.
You need a little more practice for sure.
Yeah, and they're like kind of mentioning the different groups and stuff out there. I'm not sure if you guys have heard of Bigger Pockets at all.
I haven't heard of that one, but
So there's a group out there that it's called Bigger Pockets.
Okay.
You can go to their website. They have podcasts, but they actually they are like a full real estate investing community.
yeah.
And they have so much information in there on kind of the different tricks, tips, and
Yeah.
basically how to work through it. And it's also they've kind of molded it as well as being able to find like-minded investors within your community.
Yeah.
So it's really kind of a great spot for someone starting out in investing to kind of look into, to get more information about how to even go about starting to do this.
Yes. Yeah, that's
So-
good.
That's a
That's
great
good
tip.
advice. There's a couple other groups around that I've heard of as well that do the same thing.
Mhm.
You're right. That's a great spot for a new investor to get started.
Yeah.
Yeah.
Because it's there's a lot to learn. I mean, it's a lot of people think. I mean, you watch HGTV, right?
Oh, yeah.
30
It's done in
minutes.
40,
Yeah,
30
45
minutes.
minutes, whatever. You know, a couple
New house.
commercial breaks, bam, it's done. It's not like that in real
No.
life. I can guarantee you that, 100%.
Oh yeah.
So, okay, cool, man. Anything else that you, off the top of your head, you think we need to know about hard money that our listeners need? I think you covered it pretty good there.
I mean, it's really just going to come down to whoever you speak to about that. And, I think when you get into those groups and you start talking with people and explaining, more times than not, you're going to find someone that's willing to actually help you out with that versus like just going on Google and typing hard money lenders.
right.
You know,
Exactly.
At that point, they have no idea who you are, you know,
Right.
what your goals are, what you're trying to do. And so at that point, I mean, it almost would make sense for them to even give you a little bit more or a higher cost on that up front, just because they have no idea what your situation. But if you build a relationship with an investor that is wanting to send that ladder back down to help you to get, become a successful real estate investor, more times than not, they're definitely going to be able to help you out, at least with the financing, because they've been there, done
Yeah.
that, and they have the money to do it.
Yeah.
And at the same token, the ultimate goal is to have your money making money for you.
Right,
Yes.
right.
And so
Exactly.
that's kind of the 2 cents that I have, at least with getting in those communities to help you start.
Yeah, that's
So-
awesome. Awesome, cool.
Cool.
Well, how we doing on time? Probably
We're
ought to
good.
wrap her up.
Wrap it up.
Brennan, thanks for coming on the show again with us.
Yes,
man,
thanks
we
for coming
appreciate
back.
it.
Happy
To our
be here.
listeners out there, man, if you're looking at any type of investment property, really any kind, Brennan can help you. But especially if you're looking at some investment property, need some help financing, give Brennan a call. He would do a great job for you.
Yep. Or give us a call. Jim will tell you all about his experiences doing it.
Tell you all my horror stories, and you might
Midnight, never
might not
want to
do it again. I don't know, but we're happy to help you. So feel free to reach out. We'd love to chat. And with that,
We'll see you next time.
see you next time. Thanks.
Thank you.
You've been listening to Getting Real with Real Estate with the Kemp team. Have questions about real estate or something you'd like to discuss? Contact the Kemp team at 314-336-1926 or visit our Facebook page at facebook.com/the Kemp team. Don't want to miss any episodes? Follow us on your favorite podcast app or YouTube. The Kemp team. Real, honest real estate.